Good evening, my dear students. Welcome to the next session of GST indirect tax loss, the input tax credit. As I told you, we are at the fag end of the chapter now. We were working out some problems. What is left out now in the chapter is the concept of the input service distributor, and also in the concept of input tax credit in association with job work provisions. That is left out. And we will also be working out number of problems based on what we are going to study. So all types of problems we will cover from the study material as well as from the worksheets, what is there. So last time we had discussed this problem. Let us once again go through it and let us try to work it out. Mr. X, a manufacturer of roofing sheets, is having 1,60,000 as opening balance of ITC. Before continuing, I would just like to say that the weather here is a bit off. There is a thunderstorm predicted. Just in case I have my internet active as of now, but in case of a power cut and I have to rely on my hotspot, mobile hotspot, till the laptop survives. In case of a power cut, till the laptop survives, we can do it. In case we lose connection because of such events, I'm hoping we don't. We will cover the balance syllabus in the next session. Fine. I hope everyone kindly note this. And in case I'm praying it doesn't, as of now, things are fine. Yeah. So 1,60,000 is the opening balance of ITC for the June month. He provides the following information relating to the goods and services procured during the month of June. Input tax on raw materials is 40,000. This raw material is used for making both the taxable and the exempt supplies. It is, of course, credited to the electronic credit ledger. This is just a hint what I'm given. Input on catering services procured from harvest caterers in connection with the housewarming ceremony is 10,000. Input tax on raw materials used exclusively in the manufacture of exempt supplies of 2 lakhs is 20,000. Input tax on cosmetic and plastic surgery of manager is 30,000. I've given the hints, but since the problem is a bit different, I would you can use the hints and work out the problem. Total taxable turnover for the month of June is 60 lakhs exclusive of tax. Compute the ITC credited for the month of June to the electronic credit ledger and also the net GST payable from the cash ledger by X for the month of June. Rate of GST is 18%. Subject to the information given above, assume that all the other conditions necessary for availing the ITC have been fulfilled. So you have to work out the ITC which is credited to the credit ledger and also the net GST which is payable. Please try to work out this problem. Good evening, Viraj. Good evening, Sriram. Good evening, Nambata. Hope all of you have been revising properly. Very, very important, especially this chapter, because it covers 4 sessions. It is very, very important for us to go through the problem in the very clear manner. Please try to work out this. I've given you the hints, so it should be pretty easy. Yeah, so if you see, first one is we have to calculate the ITC which is available, and then we have to also calculate the net GST which is payable. So first ITC available we have to calculate. You forget about the bifurcation of CGST, SGST, IGST, that is not given in the problem. So assume everything to be the GST and work it out. So if you see opening balance is 1,60,000, we also have to work out what is the ITC which is credited to the electronic credit ledger. So what all will be credited? Let us look at the items one by one. First one, 40,000 on raw materials. This is used for both taxable and exempt supply. So the common credits which are used, common inputs which are used for both the taxable and exempt supply will be first credited to the electronic credit ledger. Okay, so that we have to take into consideration. Second one, input on catering services. Totally blocked as per 17 subsection 5. It is very clearly given. It's totally blocked, so this will not come into the picture. Then input on raw materials used exclusively in manufacture of exempt supplies of 2 lakhs. This also 20,000. It is totally attributable to exempt supplies. So therefore, nothing will be calculated. Then we come to the cosmetic and plastic surgery of manager of factory is 30,000. Now the problem doesn't mention whether it is medical in nature or whether it is cosmetic in nature. But even though if it is medical in nature, the GST itself won't be applicable on that. So therefore, we have to assume that it is a cosmetic plastic surgery. Therefore, that is clearly a blocked credit as per 17 subsection 5. Fine. So these are the blocked credits. Then, as per rule number 42, therefore, what is the credit which goes to the credit ledger? It will be 40,000. 40,000 will be credited to the electronic credit ledger. I hope that is clear. Then you have to find out, what is the exempt supplies and what is the taxable supplies. So therefore, you will find out how much is attributable to the exempt supply. So if you go what is the turnover which is given? Turnover here, total taxable turnover is 60 lakhs exclusive of tax. So 60 lakhs is the amount which is excluding the tax. Then what is the exempt turnover which is given? Here, if you see point number 3. So one important point all of you should remember, that the information will be hidden in the problem. It will not be given to you on a platter. We have to find out where that information is hid. So therefore, here if you see, manufacture of exempt supplies of 2 lakhs. So 2 lakhs is exempt supplies, 60 lakhs is taxable turnover for the month of June. So therefore, 62 lakhs is the total turnover. So how much is related to exempt? 40,000 into 2 lakhs by 62 lakhs. So 1290 is attributable to exempt supply. So 1290, once you reverse it, then on that case, after from 40,000, you have to remove 1290 and you have to add 1,60,000, which is the opening balance. So therefore, the total ITC which you get is 1,98,710. I hope all of you got this answer. And the net GST payable will be 8,81,290. Some doubts by Janvi. Good evening, Janvi. Question 18, input tax credit to GTA for inward transportation of non-taxable goods is included. However, under 19, freight paid to GTA for transportation not leviable or taxable, though the GST is at the rate of 5%. What is the reason for different treatment? I will come back to this, Janvi. You're talking about test your knowledge question. So I think we'll be working out that question also more than so we'll be working out that particular problem, because test your knowledge, all the problems pretty much I'll be covering. So we will see when we are covering that particular topic. Both 18 and 19, I will try to work out so that it is totally clear for you. I hope this is for input tax credit chapter only, but okay. So make sure that is that. If it's for another chapter like reverse charge or something, then we'll have to go back once again. Fine. So therefore, this is the solution here. You see GST on taxable turnover, 60 lakhs into 18%, 10,80,000. ITC, as I told you, we have to work out input tax on raw material, 40,000 is available. And to the extent of exempt supplies, you will have to reverse the respective input tax credit. Okay. So 40,000 minus 1290 plus 1,60,000 is the total amount of input tax credit. And from this, the net GST payable is 8,81,290. I hope all of you understood this particular problem. 11,20,000, how did you get that, Kaushiki? Because we have to find out the net GST payable. So outward supply, whatever is the GST, from there we have to reduce the input tax credit. So therefore, this is the balance. I hope you understood the solution of the problem. You have to give explanations for all of this. When I say input for catering for housewarming, we have to clearly say the input tax on the catering services is exempt is blocked by virtue of 17 subsection 5 of the CGST Act 2017. If you remember the section, same way for the others too also, you have to clearly give the respective explanations, because only that will help the examiner understand that you have got the solution for the respective problem. Now we come to rule number 39, which talks about the procedure for distribution of credit by the input service distributor. So how does an input service distributor distribute the respective credit? We saw the concept of the input service distributor in the previous session. We also worked out a particular problem based on that. So we will go through the rule which speaks about the respective input service distributor. So 39.1 talks about, rule 39 talks about the input service distributor. How will he distribute the credit is clearly given there. So therefore, input service distributor shall distribute the credit in the manner and subject to the following conditions, namely, number 1, the input tax credit available for distribution in a month shall be distributed in the same month, and details thereof shall be furnished in form GSTR 6 in accordance with the provisions of the rule. So therefore, whatever credit you are distributing, you will distribute it in the same month, and whatever details you are distributing, whatever credit details you are distributing, you will have to clearly mention in the form GSTR 6 and clearly say that how much credit you are distributing to whichever branch. That has to be clearly indicated. Fine. Then apart from that, the input service distributor will also, what he will do is separately distribute the amount of ineligible input tax credit, which is ineligible as per the provisions of 17 subsection 5, and the amount of eligible input tax credit. If you observe here, the ineligible credit will be clearly displayed in the GSTR 2B. So once the ineligible credit is displayed in the GSTR 2B, this ineligible credit also needs to be distributed by the input service distributor. So what the ISD will do here is, he will distribute the ineligible credit as well as the eligible credit. That is a very, very important point to understand. Then the input tax credit on account of the central tax, sale tax, etc. shall be distributed separately in accordance with the provisions of clause D. So we have seen how the distribution happens in the previous session. So what does clause D say? There is a particular formula which is given. So here it's very, very clearly given, input tax credit required to be distributed in accordance with T and D to one of the recipients, that is R1, whether registered or not, from among the total of the recipients to whom the ITC is attributable, including the recipients engaged in making the exempt sum or otherwise not registered for any reason. Okay, so this is the formula which is there, where C is the credit which is to be distributed, T1 is the turnover which is to be there. We saw what is the turnover during the last period. What is the turnover is there that we have to take into consideration. That is your T1, and T is the aggregate of the turnovers of all the recipients to whom we have to distribute the input tax credit. So therefore, the turnover of one particular person divided by the total turnover into the credit which is to be distributed. This is the formula which you have to maintain and accordingly distribute the respective credit. Then going forward, the input tax credit with regard to IGST will be distributed as input tax credit of integrated tax only. It is very, very clear. Please make a note of this, everyone. Very, very important for us to understand. If there is any input tax credit on account of integrated tax, that is the IGST, when you are distributing that, you have to distribute that as IGST only. Now, with regard to the ITC on account of central tax and sales tax or union territory tax, we have to see where is the recipient located, whether he is located in the same state or whether he is located in the different state. Most likely, the recipient will be located only in a different state. Of course, head office will be there. Head office will also be entitled to some input tax credit. So head office will claim CGST and SGST. The head office will have an ISD registration. So this ISD registration will be distributed to the others. So therefore, if the recipient is in the state or union territory who is outside the state, then he will distribute the input tax credit IGST as the IGST. With regard to the state or union territory other than that of the input service distributor, he will distribute it as integrated tax, and the amount whatever is distributed shall be equal to the aggregate of amount of ITC of central tax and state tax. Very, very simple. If he has the CGST and SGST, CGST is 10,000, SGST of 10,000. If the recipient is located in other state, this 10,000, 10,000, 20,000 he will distribute it as IGST. I hope you got the point. Okay, this is how he'll have to distribute it. Input tax credit chapter, we will work out that problem, Janvi, don't worry. We will work out almost all the problems in the study material will be covered, because we have been given quite a number of sessions. As far as possible, I'll work out all the problems, and apart from that, some time permits, some additional problems also will work out. Don't worry. Yeah, so we come back to our discussion. So I hope this is clear. So therefore, point number G, the moment he distributes the credit, he will issue what is called as a input service distributor invoice, ISD invoice. In that, very clearly he will mention that the invoice is issued only for the purpose of distributing of the input tax credit. He will very, very clearly mention that. Fine. And apart from that, sometimes where the credit, whatever he is distributed in excess, by mistake, if he distributes excess credit, to that extent, he will raise a credit note. Okay, so whatever credit note is there for reduction of credit, he will raise that. Then sometimes input tax credit will be distributed on a lesser scale. Instead of distributing the entire thing due to some reason, he will distribute a less amount. In that particular point, the additional amount of ITC on account of issuance of debit note will be there, distributed in the manner and the conditions A to F. Amount attributable shall be calculated. Same calculation method what we do for the regular input tax credit, for the debit note also the same has to be done. And whenever the debit note is issued, you will have to distribute the credit and indicate that very clearly in the form GSTR 6. Fine. Now, with regard to issuance of credit note will be apportioned to the same value. Again, when you are distributing the excess credit and you issue the credit note to that respective recipient of credit, then the same way how the input tax credit was apportioned earlier, the credit note also will get apportioned in the similar manner. Now let us take an example here. ISD purchased an internet service for 1 lakh, CGST and SGST 9,000 each, distributed to all the branches as per rule number 39. Sometimes internet service distributor issues a credit note. For example, whatever the credit is there, to that extent, the inputs internet service distributor issues a credit note. In that particular situation, this credit note also you have to clearly apportion in the same way as you have distributed to the respective branches. So assuming initial 18,000, CGST and SG 18,000, 600 was distributed to state. Then from that 6,000, whatever is there, 1,200 needs to be reduced. How 1,200 you have got? 3,600 is the credit note. We'll work out a problem. They will understand more clear in a more clearer manner. So therefore, whenever you are purchasing and you are apportioning to the branches, in that case, you have to issue the credit note, and the credit note also will be issued and bifurcated in the similar manner. Okay, I hope this point is clear. Okay. Sometimes what happens, the amount of input tax credit distributed by the ISD is reduced later on for some other reason for any of the recipients. Sometimes a wrong recipient would have been entered. In that particular situation, same process as is applicable to the credit note will be followed. It's very, very clearly given. Then subject to this above rule, the ISD shall, on basis of the input service distributor, will issue an ISD invoice to the recipient entitled to such credit, and also include the ISD credit note and invoice in GSTR 6. The critical point here is, whenever you are issuing the credit, you have to raise the invoice. And whenever you are raising the invoice, you have to clearly given in the GSTR 6. And when you are reversing it credit by way of credit note or a debit note, that also you have to do in the same proportion as which is there in the original amount. So that is the way in which you have to distribute the input tax credit. Yes, I'll work out a problem based on that. Don't worry. Okay. Now we come to section number 49. Section 49, we cover only the part of the set off here. That is, we don't cover the entire provision. The entire provision will be dealt in the chapter which relates to accounts and payment of tax. In that particular chapter, you will cover the entire provisions. Here in this particular chapter, we will see only to the extent of how the amounts are being set off. Okay, how it has been utilized. This in the very first class I had explained to you how it has been set off. Fine? The same thing will have to be done here. Fine. So how it will be set off, we already discussed in the first class. So let us come back again and work it out. First thing, integrated tax will be first utilized towards payment of integrated tax, and the amount remaining, if any, will be utilized for payment of central tax and state tax, as the case may be, the union territory tax in that matter. Fine. So this is a very important point. So whatever IGST is there, this IGST will be utilized towards the payment of IGST. Whatever is remaining apart from that, he will utilize towards payment of central tax and say state tax in any order. Okay, in that order. Okay. First IGST, you have to, the most important point here is IGST credit first be utilized. Once the IGST credit is utilized for the payment of integrated tax, whatever amount which is remaining will be utilized towards the payment of central tax, or as the case may be, in that order. So that is an important point. Please make a note of it. I'll also give you a table separately which mentions that. So IGST first to be utilized towards payment of IGST, and whatever amount which is remaining will be utilized towards the payment of central and state tax, or as the case may be, the union territory tax. Now we come to the credit of central tax. The central tax shall first be utilized towards payment of central tax, and after utilized amount, if any remaining, will be utilized towards the payment of integrated tax. Okay, so I hope this point is clear. IGST first against IGST and amount remaining towards central and state tax. Central tax first used for payment of central tax, then if anything is remaining, used for the payment of integrated tax. State tax will be first utilized for payment of state tax again. If anything is remaining, it will be utilized for the payment of IGST. Now, this provision is very, very important here. The ITC on account of state tax shall be utilized for payment of integrated tax only when the balance of input tax credit of central tax is not available for payment of integrated tax. I hope you got this point. The ITC on account of state tax. Now, state tax ITC, the state tax ITC will be utilized towards payment of integrated tax only once the central tax is totally not available. So first you exhaust integrated tax, then you will exhaust the central tax, and then you will exhaust the state tax for the payment of integrated tax. That is the most important point. Always remember, first use the integrated tax for payment of IGST. Same way, the union territory tax will first be utilized for payment of UTGST, and the amount which is remaining, if any, may be used for the payment of integrated tax. Clear? So provided that the ITC of the union territory tax shall be utilized towards the payment of, is very similar. Union territory tax also will be utilized towards payment of integrated tax only when the ITC of central tax is not available for the payment of integrated tax. The rain is becoming heavier here. I hope things continue as it is. Okay, whenever it rains, there's a power cut in the country. I don't know what is the relation, but this is something which we have to live with for a number of time for the entire life of ours, I guess. Then we look at the restriction which is there. That means the amount of ITC available in the electronic credit ledger of the registered person of the central tax shall not be utilized for payment of state tax or union territory tax. And similarly, the state tax credit will not be utilized for the payment of central tax. This is, I told you in the very first class. I hope all of you are attending now. I've already listened to my first class. Okay, all this you will get, you'll remember that. Oh, how you got that 11,20,000? Credit to electronic ledger 40,000, 10,80,000. No. We have to the extent of the credit attributable to exempt supply, we have to reverse it. Okay. Then 49A talks about the utilization of ITC subject to certain conditions, notwithstanding anything contained in section 49. The ITC on account of central tax, state tax, or union territory tax shall be utilized for the payment of integrated tax, central tax, state tax, or union territory tax, as the case may be, only after the ITC available on account of integrated tax has been first totally utilized for the payment. So, important point, please make a note of this also. The input tax credit on account of integrated tax should be first utilized towards the payment of taxes. Only after, please make a note of this, input tax credit available on account of IGST will be first utilized fully towards the payment. Only after that we come to the input tax credit of the central tax, state tax, etc. Fine. That is an important point. Then 49B speaks about the order of utilization of input tax credit. This is what we have discussed now. Notwithstanding anything contained in this chapter, subject to the provisions of 49(5)(e) and F, the government may, on recommendations of the council, prescribe the order and manner of utilization of ITC on account of IGST, CGST, state GST, or as the case may be, towards the payment of tax. Earlier, the method of set-off was different. I don't want to go into that because that will simply raise to confusion. So just go as per the latest set of methods. There is some changes which have been done. Rule 88A talks about the order of utilization of input tax credit. As I told you, on IGST, whatever credit is there will be first utilized towards payment of IGST, and the amount which is even remaining will be utilized towards payment of CGST or UGST, as the case may be, in any order. Fine. I hope this is clear. IGST credit used for payment of IGST. After that, if any IGST credit is there, you can divide in the way you want for the payment of CGST and SGST. I hope this point is crystal clear for all of you. Provided the ITC on account of CGST, state GST shall be utilized towards payment of IGST, CGST or UGST only after the ITC on account of integrated tax has been utilized. So important point, first utilize the IGST credit. Once you utilize the IGST credit, please use for the payment of IGST. After that IGST credit is anything is there, use it for CGST and SGST in the order. After that IGST credit is completed, only then come to the CGST and SGST credit. Fine. I hope this is clear. Sir, I'm from which place? I'm from Hyderabad. Power cut is done deliberately to avoid getting current in water. I didn't understand, Kaushik. To avoid getting current in water means? Oh, okay. Got it. But I don't know. Here, it immediately the power goes, and we don't know never it comes back again. And surprisingly, in the month of May, we should be used to extreme heat here. But I don't know, for some reason, last 2-3 days, it's been literally thunderstorms are happening. I don't know if you are able to hear the sound, but I'm able to hear it. So in case there is a disturbance, let me know. I'll just increase the volume of my voice. Fine. So therefore, again, as I told you, summarize the entire provisions for the utilization and set off of the input tax credit. The ITC is credited to the registered person's electronic credit ledger. So whatever is the credit of ITC of CGST, SGST, and IGST, depending on the nature of supplies, it is being created, and the person may use the ITC to pay the output tax liability. As I told you, Indian GST is a dual GST, and both the taxes CGST and UGST are levied concurrently on a supply transaction. CGST revenue goes to the central government, SGST goes to the state government. I'm sure all of this by now you have to know all of this. Fine. So therefore, as we told you, many people may ask, you may have this doubt. Sir, it is one GST. Why is the CGST credit not available against SGST? Or why is the SGST credit not available against the CGST? It is because it goes to the respective government. So the respective government. So therefore, ITC of CGST and SGST is not interchangeable. Therefore, cross-utilization is not permissible. Very, very simple. Cross-utilization will not be permissible. So IGST is a transitory tax. Once IGST paid by the taxpayer, first it goes to the Central Clearing Authority. Then ITC of IGST can be used for the payment of CGST or SGST. Cross-utilization of IGST and CGST, SGST is permissible. Flexibility has also been provided to utilize ITC of IGST for payment of CGST and SGST in any proportion in any order. If ITC of IGST is used for the payment, corresponding debit or credit is made to the state government. We have seen all of this in the very first class of mine. How this backdoor process works. Whenever the IGST credit is taken for the payment, correspondingly to the respective state government, the amount is given by the central government. Fine. That is, the reimbursement is done by the central government. This slide is very, very important for you. First, ITC of IGST, first used for payment of output IGST. Next, you can use for payment of CGST or SGST in any order or proportion as decided by the taxpayer. Then before utilization of CGST or SGST credits, the credit of IGST must be exhausted totally. Okay. So these are important points which you have to remember. Okay. So ITC of IGST first used for output IGST, then used for payment of CGST, SGST in any proportion. Before you use the CGST credits, the IGST must be exhausted totally. This is the most critical point which you have to remember. We'll work out multiple problems on the order of set off. So that time all this knowledge is important for you. You have to keep it in mind very, very clearly. Then ITC of CGST, first you use for payment of output CGST, then you use for payment of output IGST. You cannot use the ITC of SGST for the payment of output SGST. I hope this is clear. Similarly, ITC of SGST, first used for payment of output SGST, then used for payment of output IGST, cannot be used for payment of output CGST. Right? Okay, now here, let us amount of ITC available and output under different heads. IGST output liability is 1000. ITC IGST is 1300. CGST 300 is output tax liability. 200 is the ITC. SGST 300 is output tax. 200 is the ITC. How do we distribute the ITC and what is the output tax liability? Please try to work out this. Yeah. So therefore, if you see, first ITC credit of IGST has to be used. So this ITC credit first used towards ITC payment 1000 rupees. So 1000 rupees exhausted. After that, ITC credit of 300 rupees will be left out. This 300 you can use as per your wish between CGST and SGST. So let us assume you are using 200 for CGST and 100 for SGST. Okay. So in this case, 200 goes for CGST liability. So 100 CGST liability will left out, and 100 goes for SGST's liability, 200 will be left out. So ITC of CGST, whatever is there, 200 is to be used towards the CGST. Okay. Since the CGST balance after above is 100, balance CGST will continue as the credit, will not be adjusted against the SGST. I hope it is clear. And whatever SGST ITC is there, you will use towards the SGST balance of 200 rupees. Fine. I hope this is clear. 1300 first used for output IGST, 300 used for 200 SGST, and 100 will be for 200 for CGST, 100 for SGST. Then ITSC of CGST 200, CGST balance will be 100 rupees. So you use it against that, and excess credit will continue as it is. And whatever SGST credit 200 is there, used towards the balance of SGST credit and complete it. Fine. I hope this is clear. Sir, it means whatever be the output tax, IGST credit should be utilized for payments of all kinds only after full utilization of IGST, respective. You are totally right, Sriram. You got the understanding perfectly. Okay. Only after exhaustion and extinguishment of IGST credit, you can come to the separate other credits what is there. Then Rule 86A talks about the restrictions on utilization of ITC. In the following circumstances, the restrictions can be imposed. The registered person who is availing the ITC has been found non-existent or not to be conducted any business from the registered place of business. So therefore, whichever registered person is there, actually that person does not exist only. Or if in the registered place of business, there is no business which is happening. And also the registered person, whoever is availing the ITC, is not in possession of the respective tax invoice or valid document. Now, still, if such ITC is, you go ahead and avail that ITC. Restrictions can be imposed by not allowing such ITC to be used for discharging any liability or not allowing refund of unutilized credit of ITC. Restrictions can be imposed by the commissioner up to a period of 1 year from the date of imposing such restrictions. However, the commissioner or the officer authorized by him can withdraw the restriction. Okay, withdraw the restriction if he is satisfied that the conditions for imposing the restriction no longer exist. Okay. And the commissioner or any officer authorized by him can impose the restrictions on utilization of ITC available in the electronic credit ledger if we have reason to believe that such ITC has been fraudulently availed or is ineligible. Now, what are the circumstances? As I told you, ITC is availed on basis of tax invoices or valid documents issued by a non-existent supplier or by a person not conducting any business from the registered place of business or without receipt of goods or services or both, or the tax in relation to which has not been paid to the government. Okay. These restrictions as such, this restriction is important. Other restrictions are not very important from examination point of view. This particular restriction, 86B, is a bit important here for our examination point of view. This is the first time what the government has done is slightly gone against the provisions of the GST law. Because the GST law is very clear that if you have the ITC, you can claim it. But over a period of time, lot of businessmen have started claiming fraudulent ITC on the basis of fraudulent invoices. ITC has been claimed. So therefore, the government said, wherever the taxable supply is exceeding rupees 50 lakhs, then this particular one restriction is there, which should be applicable. So what is this 50 lakhs which is there? 86B, it says it limits the input tax credit available in the credit ledger for discharging the output tax liability. Technically, if anything is there in the credit ledger, you have all right to discharge the liability. But this particular rule restricts that. So it also starts with a non-obstant clause. That means it has impact, overriding impact over all the above provisions or the rules. So first of all, to whom it is applicable to, please make a note of it. 86B is applicable to a registered person having value of taxable supply in a month exceeding rupees 50 lakhs. So if you have value of supply in a month exceeding 50 lakhs, then only this 86B will be applicable. In case value of supply is less than 50 lakhs, then this restriction will not be applicable. So what is the restriction which is there? It says that the registered person to whom it is applicable. So for whom it is applicable? For supply exceeding 50 lakhs. You cannot utilize the input tax credit in excess of 99% of the output tax liability. So therefore, output tax liability, for example, it is 20 lakhs. Okay. So in excess of 99% of output tax liability, you cannot adjust the input tax credit. That means 1% of the gross output tax liability you have to pay by way of payment through the electronic credit ledger. If you cannot adjust the input tax credit, even though it is available. So for this, the condition is the value of supply exceeding rupees 50 lakhs. Fine. This is the rule which is applicable. Example, the total value of interstate supply of Anu and Sons for the month of February 2021 is 100 lakhs. Said supply is taxable at 18% IGST. Therefore, total liability is 18 lakhs. Amount available in electronic credit ledger is 20 lakhs IGST. So restriction, what is there? 99% of 18 lakhs only it can pay by way of credit. So 17 lakh 82,000 you can use from the electronic credit ledger. 1% of the gross output you have to pay through cash ledger only. I hope this example is also clear. Okay. 86B, important from examination point of view. Payment of income tax more than 1 lakh. Sometimes where the person mentioned below had deposited more than 1 lakh as income tax under the IT Income Tax Act in each of the last 2 financial years for which the time limit has expired. Wherever the due date for filing the income tax return has expired for the last 2 financial years, in that particular case, where the payment amount has been deposited for more than 1 lakh, okay, in such cases, exceptions are given to 86B. So in such cases, rule 86B will not apply. So therefore, to the person who is mentioned below should have paid amount of 1 lakh as income tax in the last 2 financial years, wherever the due date for filing the income tax return is expired. So who are the persons which are there? The registered person, number 1, or the Karta or proprietor or managing director of the registered person, and any of the 2 partners, full-time directors, members of the managing committee of the registered person, as the case may be. So it's a this 86B technically is not a very stringent provision, because a person who has 50 lakhs per month, okay, that his registered person or Karta, proprietor or managing director will definitely have paying minimum 1 lakh income tax. So therefore 86B is not a very stringent and not a very tough section. Okay, it is pretty much a lenient section only, because if these people are paid 1 lakh rupees as income tax in the last 2 financial years, wherever the due date of IT filing is expired, then in that particular situation, this 86B will not apply. Then further exception, the receipt of refund of ITC of more than 1 lakh. Okay, wherever the registered person has received a refund amount of more than 1 lakh on account of unutilized ITC under the following: zero rated supplies made without payment, inverted duty structure. This These two you will see in more clarity in the refund step. So just to give you a brief about that, refunds can be applicable in case of zero rated supply. What is zero rated supply? If you are supplying to service or good outside the country or to a special economic zone, then zero rated supply made without payment of tax. Second case is inverted duty structure. That is, the GST what you pay on the inputs is significantly the rates are higher as compared to the GST what you are charging on the output sales. So therefore, in that particular situation, these two cases, the refund of more than 1 lakh, if it is received straight away, our this 286B will not apply. Main important thing what you have to ensure is the refund should have been received in the preceding financial year. Sir, this restriction will be applied in the previous problem we have worked out since the taxable supply is 860 lakhs. Yes, restriction will be applicable, but he has not given in the problem that he has not filed the return or is got the receipt of refund. So wherever the problem is silent, don't assume this 86B to be applicable. Only if the problem clearly says that in this particular situation, the IT return as income tax of 1 lakh has not been paid, only then you go to the respective 86B and apply it to the problem. And make sure you write this assumption very, very clearly. Okay. Payment of income tax is 1 lakh, total income tax or amount paid net of adjustment. Total income tax. Even TDS is like income tax one. Advance tax is like income tax one. It is total income tax, not necessarily self-assessment tax. So all the TDS, advance tax, everything put together should be more than 1 lakh. Why income tax paid within due date not mentioned? Why after the due date? So where you say that the due date of the income tax return has been expired, that means for that year the payment should have been happened. So as long as you pay for that year. So what does the provision exactly say? It says that in case where the person below has deposited more than 1 lakh as income tax in last of the 2 financial year. So here the registered person, you have to see what is the tax they have paid. The return filing is not relevant here. What is the tax which you have paid for the last financial year for which the time limit is expired? If he pays the tax, then straight away this 86B will not apply. Okay, I hope it is clear. One more thing, he says in each of the last 2 financial years. So there may be an impression if we read this section that if he pays this tax now, if that person, he doesn't file his return for the last 2 years, but he pays 1 lakh now. Is this rule applicable or not? On the plain reading of the rule, it clearly implies that as long as he pays the income tax, the respective 86B will not apply. It does not say that the amount of income tax should be paid before the set due date. It doesn't say that. It doesn't mention of any date. So therefore, if in case this 86B is applicable and you have not paid any tax, in case you pay that respective tax, then still, as per the reading of the section, it appears that 86B will not be applicable. Please summarize income tax point 86B. Only tax. Only tax. It doesn't say interest penalty. Tax. It uses the word tax. It uses income tax more than 1 lakh. I just mentioned that. Is it clear or should I tell again? Our Namrata. Because you told 2 minutes back this query. Last 2 minutes I have explained that only. In case you want me to tell again, please let me know. I'll again explain it to you. Namrata, just let me know if you want me to explain it again. I will explain it to you. Okay, I'm assuming that you have understood. If you have not understood, let me know so that I'll come back to it one more time. So therefore, payment of one more exception, payment of total output tax through electronic cash ledger in excess of 1% of total output tax levy. So in case in one particular month, the turnover is more than 50 lakhs and up to that particular month, if the registered person has paid more than 1% of total output tax liability using electronic cash ledger, the restrictions will not apply. Okay, so therefore, output tax liability is 30 lakhs. Registered person has deposited 1 lakh through cash ledger, balance credit ledger. The 86B will not be applicable if the turnover during this month exceeds 50 lakhs, since payment made in cash is more than 1% of the output tax liability. Okay, so if you take an example here, now how does the respective model work here? A credit ledger and cash ledger. Credit ledger shows the amount which the taxable person can claim as input tax credit. Okay, now let us examine what is this restriction. Okay, now let us take an example here. April to September. April to September. Okay, April to September. The output tax liability is 30 lakhs. Okay, same example as I am again writing so that you understand. Okay, and up to September, the taxable person has paid rupees 1 lakh through cash ledger. 1 lakh through cash ledger. Then you have to see whether it is paid more than 1% of tax liability. What is 1% of tax liability? 30 lakhs, 30,000. So since the amount is more than rupees 30,000, amount which paid through cash ledger, amount paid through cash ledger is more than rupees 30,000, then rule 86B will not apply, even if turnover. Okay, what does 86B say? You see here, go back to this 86B. Okay, value of taxable supply more than 50. Okay, even if turnover of October is more than rupees 50 lakhs. I hope you understood this exception. Did you get clarity? Did you get clarity? Okay, so this exception I hope you understood. Now we come to you wanted clarity on this exception. So here what happens? Okay, let us again take an example here. Now, Mr. A, taxable person, has made total supply of rupees 75 lakhs in April 2023. Okay, so what you have to do, you have to look for the two financial years where the due date under section 139(1) has expired. What is due date under 139(1)? You have attended income tax means you will know. July 31st for individuals, September 30th audit report 3CB 3CD, and October 31st for return of specified people like companies, for the people for whom tax audit is applicable, trust, AOP, association of persons subject to having 12AB and ATG registration, all of them. So therefore, we have to look at financial year 21-22, because financial year 21-22 due date is expired. Okay, you cannot file the income tax return under 139(1). There is a separate section called 139(8)(a). Under that you can file, but 139(1) due date is expired. And financial year 2020-21 ITR of Mr. A needs to be analyzed. Okay, so we have to see if rupees 1 lakh has been paid. So therefore, in this case, what does it say? The exception. Payment of income tax more than 1 lakh in each of the last financial years. So that means what he has to do, we have to see, it needs to be checked whether Mr. A has paid a minimum of 1 lakh in each financial year. Okay, which financial year? Above financial years, in each of the above financial years. each of the above financial years. If he has paid, then Rule 86B will not be applicable for April 2000. Is it clear now, everyone? Can you explain the previous exception once again? Previous exception means which one, Sriram? Income. You are talking about the exception for this one, output tax liability. That one. It's very simple. See, first of all, you should understand what is a credit ledger and what is a cash ledger. Okay. How many of you have actually seen a GST portal after logging in? How many of you have actually done that? Can anyone tell me? If you have seen a GST portal, you will understand what is a credit ledger and cash ledger. How many of you have seen a GST portal? If you have gone, attended properly, you would have seen. Sir, in case of example of paying 1 lakh through cash ledger, you said that in case of turnover exceeds 50 lakhs, will not applicable. What if the turnover limit of 50 lakhs is exceeded in month of December or Jan? Still, as an example, I told you. See, what does the rule say here? The rule says that in payment of total output tax liability in excess, if he has paid more than 1% of output tax liability up to the said month in the financial year. That means one financial year you have to see April to September. Okay, in your case, what you are telling in December, January. So in December, let us see here. In December or January, 50 lakhs has been exceeded totally. Then what you have to do? You have to look at the turnover for April to November. April to November, whatever is the turnover, whatever is the output tax liability, 1% of that he has to pay through cash ledger. If he has paid 1% through cash ledger, then this 86B will not apply, even if your turnover exceeds 50 lakhs in the month of December or Jan. I hope you got that point. Okay. Fine. So this one, did you understand, everyone? April to September, this is just an example. This is just an example. April to September output liability is 30 lakhs. You have paid more than 30,000 till September. Then October month, the turnover limit increases. Then it is not up. Now, if you say for December month, what happens? Still again, you have to see what is the output tax liability. Then you have to take the turnover from April to November. Let us assume in your case, you are telling in December month, it exceeds 50 lakhs. Then you have to see from April to November. April to November, how much it is done? Same thing you have to check. 1% is paid in output tax liability means not applicable. If 1% is not paid, then 86B will be applicable. I hope it is clear now, everyone. Is it clear? Now, exceptions in 86B specified registered person. 86B will not be applicable to the below mentioned registered persons, government department, public sector undertaking, local authority, statutory body. In all these 4 cases, 86B will not be applicable. But sometimes what happens, commissioner or any other officer authorized by him will also remove the restriction on such verifications and safeguards as he may deem fit. So the restrictions can also be removed by the commissioner if he feels that they have to pay the respective amount. Okay. Now, please try to answer this problem. Determine the amount of tax payable through credit ledger or cash ledger from the given information. Taxable turnover of ABC in the month of February is 1 crore 25 lakhs excluding zero rated and exempt supply. Total amount of ITC as per books in the month of February is 25 lakhs. Amount of ITC as per 2A or 2B for February is 23 lakh 10,000. Applicable tax rate is 18%. Please try to answer this problem. If it is clear, then you have to answer this problem. Only then I'll understand that you all have understood the concept clearly. So in this question, please don't look at the answer of the study material. Okay, answer of the study material is not correct because it talks about that 5% ka thing. So don't look at the answer in the study material. So if you see here, output tax on 1 crore 25 lakhs, 18% is 22 lakh 50,000. The ITC what is available in the GSTR 2A or 2B is 23 lakh 10,000. So 23 lakh 10,000 is matched to the ITC. Now you have to see what is the turnover. Turnover is more than 50 lakh, total ITC cannot be used. So how you have to work out? 99% of output tax liability. So output tax liability is 22 lakh 50,000. 22 lakh 50,000 into 99%. This you can use the credit. Okay. 1% of this 22,500 you have to pay via the cash flow. You have to pay via the cash flow. Okay. In the study material, it is a bit confusing. It says availment is restricted to 5% of the reported invoices. That is not correct. That rule was there before. Now it has changed. Now whatever is there in 2A, 2B, that only you can claim. That is why ignore what the study material and consider this answer. Okay. Good. Now we work out some more problems. Based on this one is our 17 subsection 5. Siddhi Limited is a registered manufacturer engaged in the taxable supply of goods. Siddhi Limited purchased the following goods during the month of January. The following particulars are provided by the company. Capital goods purchased on which depreciation has been taken on full value, including GST, 15,000. Okay. Goods purchased from Ravi Traders, invoice is received in the month of Jan, but goods were received in the month of March, 20,000. Car purchased for making further supply of car. Such car is destroyed in the accident while used by test drive by potential customers, 30,000. Goods used for setting up telecommunication towers, 50,000. Truck purchased for delivery of finished products. Determine the ITC available for the month of January by giving necessary explanations for treatment of various items. Subject to the information given above, assume that all other conditions have been fulfilled for claiming the input tax credit. Please try to answer this problem based on 17 subsection 5. First one, let us look at one by one. First one, whether ITC is available. Let us look at one by one. I want with explanation, just not say not available, available, like that you should not take. How will you write in the exam? The same way you have to mention. Okay, can be bit brief, not exactly as per that. But first one, whether it is available or not, please tell me. First case. Capital goods purchased on which depreciation has been taken full value, including GST paid thereon, 15,000. Whether we can claim the credit or not. Any answers waiting? The rain seems to have stopped also, by the way. ITC, okay. Yeah. So if you remember the section, mention the section. Section is 16 subsection 3 is the section which talks about this particular point. Therefore, if the depreciation is been claimed as like that on like this only, you have to write. Since the depreciation has been claimed on the tax component of the value of the capital goods, ITC of such tax cannot be availed in terms of 16 subsection 3. Understood? You have to clearly mention that point. You cannot claim the input tax credit because he has claimed depreciation on the GST component also. Second one, everyone. Goods purchased from Ravi traders. Invoice is received in the month of Jan, but goods were received in the month of March. What is to be done here? Correct. So therefore, in the second case also, what is happening is, since the goods 16 subsection 2 clause B mentions this particular point, where the goods have been received in the month of March, ITC can be availed only in the month of March. So therefore, one of the essential conditions in section 16, which speaks about ITC claiming, is that the goods have to be received for the purpose of claiming the input tax credit. So therefore, if the goods have been received in the month of March, you can claim the input tax credit only in the month of March. You cannot claim it in the month of January. So therefore, the question asks in the month of January. So goods purchased from Ravi traders also, you cannot claim the input tax credit. Third one, car purchased for making further supply. Such car is destroyed in the accident while using for test drive by potential customers. What is the answer for this one? Motor car, what is the issue? What is the answer? Waiting. This is difficult to understand, not whole part. I didn't understand your query, Viraj. Can you tell your query in detail? Let me know what is the difficulty. I will ensure that that goes away. Okay, so therefore, car is purchased for making further supply of such car. Technically speaking, 17 subsection 5, it says that purchase of the car, you cannot claim as the input tax credit. But one of the exception is that the supply of such cars, you cannot, if one of the exception is, if the motor cars are used for further supply, then in that particular case, it's an exception to the block credit and can claim the input tax. But here what is happening? That car is destroyed in the accident. So therefore, 17 subsection 5 also says that in case of goods lost, stolen, or destroyed, you cannot claim the respective input tax credit. So therefore, it passes the test of 17 subsection 5 clause A. It fails in the test of 17 subsection 5H, which speaks about the supply of the respective car. If it is destroyed, if the goods are destroyed, because these are goods only for the purpose of the taxpayer. So if the goods are destroyed, there is no question of claiming the input tax credit. No. Car is purchased for course of which ITC can be claimed, but it is destroyed. So refer to 17 subsection 5, clause H. It clearly says goods lost, stolen, or destroyed, you cannot claim. Very, very tricky question. This one is very, very tricky. So it appears it is available. Technically, it fails the test of another clause, that is 17 subsection 5, clause H. Next one. Very interesting one. Goods used for setting up telecommunication towers. Goods used for setting up telecommunication towers. Very, very interesting, very, very tricky question. Very good. Telecommunication towers are outside the ambit of plant and machinery. The explanation which speaks about the plant and machinery clearly excludes the telecommunication towers. This point only you have to remember. Did you understand? No one will ask you definition of plant and machinery, give the explanation of plant and machinery. No one will disclose that. What everyone will disclose is that you have to understand whether it is plant and machinery or not. If it is plant and machinery, input is available. But in this case, clearly plant and it is telecommunication towers is outside the ambit of plant and machinery. So therefore, there is no, it is used for construction of immovable property. Therefore, construction of immovable property is blocked even when such goods are used in course or furtherance of business. Therefore, in this particular case, telecommunication towers, you cannot claim the respective credit. I hope it is clear. Good. Next one is pretty simple. Truck purchase for delivery of finished products. If you are using the motor vehicle for transportation of goods, then you can claim the input tax credit. Only transportation of passengers is included in the section of 17 subsection 5. Since it is used for delivery of finished products used for goods, in this particular situation, you can claim the input tax credit. I hope everyone understood this problem clearly. Okay. Next question. Now, this question is going across many slides. So I will tell you which page of the study material. It is page number 8.128. 8.128. Please open that page of the study material. Or you can see in the slide also, your convenience. Sarani Weavers at Pune, Maharashtra is a registered input service distributor and intends to distribute the ITC, input tax ISD problem. Someone asked, no, this is the ISD, input service distributor problem. Distribute the ITC for the month of March. The following are the details available for such distribution. Ganganagar branch, Rajasthan, 10 lakhs. IGST applicable to the branch, IGST 12,000, CGST 3,000, SGST 3,000. Madhugiri branch, Karnataka is 5 lakhs. ITC applicable is nil. Kosala branch, UP 15 lakhs. ITC applicable is nil. Mumbai branch, Maharashtra, 20 lakhs is the turnover of the last quarter. IGST 1.5 lakhs. CGST 15,000. SGST 15,000. So these details are given. ITC available on input services used for all the branches is as under. CGST 60,000, SGST 60,000, IGST 1,20,000. ITC IGST of 10,000 pertaining to March last year was inadvertently not distributed. Whether the same can be considered for distributing March this year. Madhugiri branch uses input service to manufacture exempt products. Turnover excludes duties and taxes paid to the state government. Determine the manner of input tax distribution. Please try to answer this. Anyone? So therefore, here what is happening, you have to see what is the credit. Okay. Now, in this case, ITC applicable to the branch is given. Okay. ITC available on input services commonly given is also given. Now, if you see here, ITC, which is 18,000 attributable, okay, to Ganganagar branch. Okay. 18,000, he clearly says it is applicable to Ganganagar branch. Okay, so this 18,000 straight away you distribute as IGST. Why you distributed this one? So these three you have to distribute it as IGST. Why IGST? Because it is in Rajasthan and input service distributor is in Maharashtra. So as I told you, this we clearly mentioned that, see, there are two types of ITC. One which is specifically attributable to the branch, and one is the common ITC which you have to segregate as per the turnover. So this is specifically attributable to the branch. So therefore, in this particular situation, this 12,000, 3,000 and 3,000 will be distributed as IGST to the Ganganagar branch. Madhugiri branch, there is nothing to do. Then the Kosala branch also, nothing to do. Mumbai branch, Maharashtra. Here, ITC specifically attributable is says IGST 1,50,000, CGST 15,000, SGST 15,000. Now this is located in the same state. Since it is located in the same state, he will distribute it as it is. So these particular three columns will be distributed as it is. Okay, I hope it is clear. Distributed as it is since branch and ISD located at in same state. This 18,000 will be distributed as IGST since branch and ISD are in different states. I hope you got the clarity. Madhugiri Kosala, nothing is there. Now we come to the common ITs. CGST 60,000, SGST 60,000, IGST 1,20,000 is there. Now here what you have to do? We have to total what is the credit which is applicable. Okay, that we have to do. What is the total credit which is applicable? So 60,000 plus 60,000 plus 1,20,000. Okay, 2,40,000 is the total input tax credit which is there. Okay, 2,40,000 is the total input tax credit. So once you look at the total input tax credit, now you see the turnover. Turnover of Ganganagar 10 lakhs, Madhugiri 5 lakhs, Kosala branch 15 lakhs, Mumbai branch 20 lakhs. So total turnover is 50 lakhs. So therefore total turnover, okay, total turnover is 50 lakhs. And what is the common ITC? Common ITC is rupees 2,40,000. We'll come to the 10,000 separately. So common ITC is 2,40,000. So how much will go to our Ganganagar? Okay, Ganganagar, how much will go? Based on the turnover. So 2,40,000, whatever is there, into 2,40,000 into 10 lakhs by 50 lakhs. So 1 by 5. Okay, 1 by 5. This will go straight away as IGST credit. Why? It is located in a separate state. Separately 48,000 will go as an IGST credit. Similar way you have to do for Madhugiri. Madhugiri is how much? 5 lakhs by 50 lakhs into 2,40,000. Fine. So again, you have to distribute it only. Also, see here, if you, he gives one problem. Madhugiri Karnataka uses input service to manufacture exempt products. Still distribution is to be done. We saw in the rule that Madhugiri branch will not be eligible to that credit, but it's a responsibility of ISD to distribute the credit. Then Kosala branch also 2,40,000 into 15 by 50. Now when we come to Mumbai, how is it done? You have to take CGST, SGST and IGST and divide it as it is. So this will be turnover of Mumbai 20 lakhs by 50 lakhs into 60,000, 20 by 50 into 60,000, 20 by 50 into 1,20,000. So that is the way you have to distribute the credit. Now, if you see for 10,000 pertain to March last year was inadvertently not distributed. Since it is not distributed in the last year, you cannot ITC of 10,000 cannot be distributed in the same this year as it is to be distributed in the same month. That is the rule which clearly says. So you have to distribute the ITC in that month only. If you don't distribute the ITC in that particular situation, you cannot distribute it in this particular month. Fine. So therefore, I hope this is clear. Total GST attributable to Ganganagar will be distributed as IGST. In case of Mumbai branch, since it is the same state as it is, the credit will be distributed. Fine. This is how the turnover will be distributed across all the 3 branches based on the turnover. So total credit you calculate based on the turnover, you allocate the credit. For Mumbai branch, whatever credit is there as it is, you take, and based on the proportion, you distribute the credit. For other states, it will be as per IGST. Okay, I hope it is clear. This problem based on input service distributed. $18,000 including in common credit. Which 18,000 more? Let us go to that question. This 18,000 is not credit, common credit, because it is exclusively pertain to the branch. He clearly says that. So this one is not your common credit. Okay. Is this question clear? Someone asked me for the problem based on input service distributor. Is this question answer clear? Any queries? Done. Now we look at the next question. George Private Limited, a registered supplier of Kerala at Kerala, who pays the GST under the regular scheme. On this also I will tell you which page it is. This is page number 8.129. 8.129. Okay. Yeah, George Private Limited, a registered supplier of goods at Kerala who pays GST under the regular scheme, has made the following transactions exclusive of tax during the tax period. He made purchases of 5 lakhs from registered dealer in Delhi, 10 lakhs to registered dealer in Delhi again. IGST 18, CGST 99. 2 lakh 50,000 purchase from registered dealer in Trivandrum, 8 lakh sales to registered dealer in Trivandrum. The company has complied with all the conditions for claiming ITC. Following information is given based on the balances. CGST 50,000 tax, interest 1,500, penalty 500. SGST 30,000 tax, interest 1,500, penalty 500. IGST 1 lakh, interest 2,000, penalty 500. Please work out the minimum net CGST, SGST payable from cash. This is a problem which is based on our utilization of credits. Please try to answer this. Please try to work out. Yeah. Any answers? Yeah, what is your doubt? There. Sir, in Mumbai branch, ITC, IGST 1.5, CGST 15, 15,000 is already available. Is this different from the common credit, or can we assume that no, it is different because he clearly has mentioned in that column, Sriram, that it is attributable to the Mumbai branch. So the moment is mentioned that you cannot presume that it is included in the common credit. I hope you understood. Yeah. So how do you work out this? First, you have to compute the GST payable. So first, you have to work out. Always remember, in a GST related question, first you have to work out the output tax liability and then avail the input tax credit. So first year, he makes the sale of 10 lakhs to registered dealer in New Delhi. This George is supplier in Kerala. So 10 lakhs into 18%. 1.8 lakhs will be IGST. Okay, because he's selling it to this customer in New Delhi. I hope that is clear. Then the second question is sales made in Trivandrum. Sales is made in Trivandrum to registered dealer means CGST, SGST will be applicable. So on this 8 lakhs, CGST and SGST will be applicable. Fine. So that will then you have to work out the ITC which is available during the tax period for set off. So first thing, what you have to do, IGST balance you have to first set off. What is the IGST balance? You see here, IGST is 1 lakh. IGST is 1 lakh. Interest and penalty you cannot claim as the input tax credit. Please bear in mind, interest and credit you cannot claim as the balance. Okay. So on 1,80,000, you straight away utilize the credit. Okay. If you see here, what is the credit of IGST? 1,80,000. First, you have to adjust against the IGST credit, then against the CGST and SGST. So therefore, here sales made outside Kerala 10 lakhs, 1.8 lakhs is the IGST. Sales made in Trivandrum, CGST, SGST 72,000. This is the total output GST. always bear in mind in any question of if they ask for GST payable from cash ledger and also talk about the input tax credit, you have to take into account the sale and the respective ITC. Okay, so therefore, what is the ITC credit which is available? If you see here in the question, it says that IGST credit is 1 lakh, CGST is 50,000, SGST is 30,000. So therefore, in this particular situation, IGST credit and CGST credit has to be taken into consideration. Okay, so credit of IGST first utilized towards the payment of IGST. Okay, that is what has to be done. So on this basis, you try to work out the problem and then we'll discuss the solution. I hope you got the way of set off of the credit. So if you see here, another important point is this is the opening balance of the tax which is there. Apart from this, there are also purchases which are happening. So purchase from registered dealer in New Delhi, 18% will come on this. So 18% of 5 lakhs, 90,000 credit of IGST will come. On the CGST, SGST will come. So that also is an important point. So what is the ITC which is available? We have to see. Opening balance is these three, which is clearly given. Purchase from New Delhi 5 lakhs, 18% is the IGST. So IGST balance total you have 1,90,000. So after you calculate the outward tax liability, the second step in any problem what you have to do is calculate the ITC which is available, including the opening balance headwise. That has to be done. So CGST balance is 72,500, SGST is 52,500, 1,90,000 is IGST. So the thumb rule, always first exhaust the IGST balance. So 1,90,000 first you will exhaust against 1,80,000. So out of 1,90,000, you will reduce this 1,80,000. Another 10,000 will be left out. This 10,000 you can do it as per your wish. But here let us assume that you are doing against the SGST. So 10,000 gets reduced from this one. So with this, your IGST credit gets extinguished. Now we come to the CGST credit. CGST credit is 72,500. The CGST credit you can utilize only against CGST. You cannot utilize against the SGST. So 72,000 you utilized against SGST. Since the CGST credit is 72,500, this 500 will get excess ITC which will be carried forward. Now, when it comes to SGST, 10,000 you have utilized from the IGST. Another 62,000 is there for which you can utilize the SGST credit of 52,500. Once you do that, 9,500 will be the net liability which has to be paid. Is it clear? Okay. That ITC, you can make an assumption. There is no fast rule. This IGST, once you have used, you can use for CGST and SGST in any order. So that you can make an assumption. There is no problem. Okay. I hope this point also is clear. Now, this is a slightly big problem. Before we do this, let's take a break of 10 minutes and we'll resume with further problems in our post our discussion. Okay. See you in the next 10 minutes. Uh, Viraj, we are doing the problems based on the understanding. If you are understanding the solution, it is fine. You are not expected to solve it on your own because just now you have learned the subject. But if you are understanding how the solution is coming, then you have nothing to worry. Okay. What is the rate for computation? See, rates are not very important from examination point of view. Rate will be given in the question and it will usually be only one single rate. Very rarely you will have questions with more than one rate of tax which is applicable. And also for your respective preparation, I would suggest you to go through the study material in detail, okay, and along with the supplementary study paper. That is very important because the study material is there. It is wonderfully given, the way it is drafted, and also your the revision part at the end of each chapter. Please go through that very clearly, and but please read it along with the supplementary study paper. It is very, very important because whatever amendments have happened are given in the supplementary study paper. In my presentation, I have made sure that all the amendments which is given in the supplementary study paper has been covered. If anything has been missed out, we will also go through the supplementary study material one more time. So important thing is don't rely on XYZ. Study material is the most exhaustive, most simplified. The way it has been provided is simple, very easy to understand, and especially the revision chapter at the end is it's very, very easy for you to revise it whenever you want. So don't worry if you are not getting the solution because you have just learned the concept and these are all big problems. So as long as you understand how the solution has come, then you are fine. Okay. So let us go through this problem, another very big problem. I will tell you the place where it is located in the study material. It is problem number 18. Okay. Problem number 18 in page number 8.134. Fine. This is what you had asked our someone had asked Janvi or someone had asked this question. So we'll deal with this question for you to understand better. Fine. Now, let us go through the respective problem. Any further queries till now? Now, all-in-one store is a retail chain of departmental store having the presence in almost all the metro cities across India. Both exempted as well as taxable goods are sold in such stores. The stores operate in rented properties. All-in-one stores pay the GST under the regular scheme. In Mumbai, the store operates in a rented complex. Okay, please, all these you have to underline whenever you are reading the question. All-in-one GST under regular scheme, that is number one. And in Mumbai, the store operates in a rented complex, part of which is used by the owner of the store for personal residential purpose. So the store is using the rented complex, and a part of the store is being used by the owner for personal residential purpose. All-in-one store furnishes the following details. Aggregate value of various items sold in the store. Taxable items is 42 lakhs. Items exempt via notification is 12 lakhs. Items not leviable to GST is 3 lakhs. Now, Mumbai store transfers to another all-in-one store located in Goa certain taxable items for the purpose of distributing them as free samples. The value declared in the invoice for such items is 5 lakhs. Such items are sold in the Mumbai store at 8 lakhs. So, this question, the way he has given all-in-one in the question itself, that means pretty much all the concepts are covered here. You are even covering value of supply here. The provisions relating to value of supply also will be covered here. So this question covers pretty much most of the topics which has been discussed till now. So this question is very, very important. It covers pretty much everything what we have discussed. All the provisions, it will be as if you are revising it once. Aggregate value of various items procured for being sold in the store. So these are all the purchases. Now, the value for sales is given in point number 1. Point number 3, see the wording what he's using. Procured for being sold. So you'll always, if the word sold you'll see in the fast manner if you do in the exam, you'll immediately think that is sales. But technically it is the purchases. Aggregate value of items procured. So taxable items 55 lakhs. Items exempt via notification 15 lakhs. Items not leviable to GST 5 lakhs. Freight paid to goods transport agency for inward transportation of taxable items 1 lakh. Okay, this whether it comes under RCM, please think and let me know. Freight paid to GTA for inward transportation of exempted items 80,000. Freight paid to GTA for inward transportation of non-taxable items 20,000. Monthly rent payable for the complex 1,50,000 is the monthly rent. Out of this, one third of the space you are using for personal residential purpose. That means what? Common input tax credit used for business and non-business purposes. Immediately you have to understand this. Then activity of packing the items and putting the label on the store along with the sale price has been outsourced. Amount paid for the packing is 2,50,000. Salary paid to the regular staff 2 lakhs. GST paid on inputs used for personal purpose 5,000. GST paid on rent-a-cab services availed for transportation of employees, which is not obligatory under any law, 4,000. GST on items given as free samples is 4,000. So exhaustive problem. You are required to compute the following. Number one, ITC, what is credited to the electronic credit ledger, common input tax credit, ITC attributable towards exempt out of common credit, eligible ITC out of common credit, net GST payable. This also is covered, but thankfully here he is not given the CGST, SGST. So yeah, he's given that also. So that also you have to see. Net GST payable, wherever applicable, GST under reverse charge is payable at 5%. Rate of GST is 18%. Ignore CGST, SGST, IGST for sake of simplicity. All purchases are made from registered suppliers. Wherever applicable, the amounts given are exclusive of tax. Subject to the information, assume that all the other conditions have been fulfilled. So for all this, you have to work out. First, input tax credit. You just work out based on your knowledge. Don't worry about whether it is right or wrong. Just see what you're able to track and accordingly work out this problem. After that, we look at the solution. I'll give you 5 minutes, then we'll discuss the solution. Very exhaustive problem. Covers all the provisions which you have written. Other than maybe place of supply, that is not covered here, but pretty much covers everything. So first to look at the input tax credit. How do you work out the input tax credit wherever there is common credit? You have to first take the total input tax involved. From there, you have to remove the input tax attributable to non-business purpose, input tax attributable to exempt supplies, and input tax attributable for blocked credits. After you remove that, you will get the total input tax credit which is there. Fine. Then for non-business purpose exempt, you will get the input tax credit for whatever has to be credited to the credit ledger. Once you get that, you have to calculate the common input tax credit. After you calculate common input tax credit, how much is attributable to the taxable supplies, you have to take out that. That is the common credit. Then for exempt supply, exempt by to taxable supply, you will get the common credit attributable to the exempt supplies. Then you will have to calculate the eligible ITC. Then net GST liability is very simple. GST liability under forward charge. Then also reverse charge is there in this question. So reverse charge mechanism will be applicable. And with that, we'll get the balance calculation. Okay. Please try to work this out. Yeah. So therefore, first what we will see is calculating the input tax credit. So important point here you have to understand is the computation of ITC for partly business and partly other purposes, and for partly you have to take the rule which is there as per rule number 42. So therefore, what is rule number 42? You have to first take the total credit which is credited to the credit ledger, that is T. From the T, we have to remove T1, T2, and T3. So T1 is your non-business purpose, ITC, which is used for non-business purpose. T2 is ITC, which is used for exempt supply, and T3 is input in respect of which credit is blocked. Now let us look at each point here. Now, if you go through the question, what all are given here in the question, we have to see. First, sales is given. So first what you do is calculate the GST on the sales. That is what you'll have to do. So aggregate of various items sold in the store. If you see, 42 lakhs is sold in the respective store. Then item 42 lakhs aggregate value of the items which are sold in the store. And apart from this, he also looks at aggregate value of various items procured. There is also transfer to all-in-one store located in Goa. These are the two things which have to be taken into consideration. So how do you work out the total sale here in this particular situation? First is basically your respective, if you go to each particular item here, the GST under forward charge, first very clear, 42 lakhs into 18%. 42 lakhs into 18%, you will get 7,56,000. Okay, so in this 55 lakhs, 42 lakhs is there. Okay, 42 lakhs into 18%. Now, if you go back to the problem, he tells another important point. He says that this 42 lakhs he has sold, items exempt GST, there won't be anything. This is the critical point which you have to understand. Mumbai store transfers to another all-in-one store in Goa certain taxable items for the purpose of distributing as free samples. Value in invoice is 5 lakhs. Such items are sold in Mumbai store at 8 lakhs. Can you tell me what is to be taken here? Can you tell me what is to be taken here? I want your understanding on value of supply before I can proceed further. That is why I'm asking you, what is to be taken there? Okay. Fine. So therefore, you have to see the important point for getting the outward tax liability. So therefore, if you look at this is, this is computation of ITC. So we were looking at the sold here. So this one, see, please bear in mind, this one is sales, aggregate value of various items sold in the store. So first question, what is asking? If the ITC credited to the credit ledger. So therefore, we have to look at this one. Okay, there is a small error here. So we have to take this particular point. Taxable items 55 lakhs. Items exempt, items not leviable to GST. Anyways, there won't be any input GST. So straight away, 55 lakhs into 18% you will take. That is 9,90,000. Of course, items exempt via notification, there is no ITC. Items not leviable to tax, there is no ITC. Now you look at the reverse charge mechanism. Freight paid to goods transport agency for inward transportation of taxable items. This is clearly covered under the reverse charge mechanism. This is very much covered under the reverse charge mechanism. We have seen the topic with regard to charge of GST. There we have to see. So 1 lakh into 5% we have to take. Then freight paid to GT on inward transportation of exempt items. Even if it is exempt items, if you are paying under reverse charge, then it will very much be applicable. So therefore, on exempt items also, 80,000 into 5%, that will be your GST paid under the reverse charge. Then non-taxable item also. See, here what is happening? We have to calculate the total input tax paid per month. Total input tax paid per month. So therefore, if you see here, whatever input tax relates to exempt supply also needs to be taken into consideration. So therefore, inputs for freight paid to non-taxable items also will be considered. So therefore, because why we are calculating first T, which is the total input tax credit. I hope you are following everyone. So total input tax credit is calculated here. So therefore, the ITC pertaining to the exempt also will be taken into consideration. So therefore 5,000 is for taxable items, 4,000 under reverse charge basis for exempt items, and 1,000 for non-taxable items. So how did you get that 1,000? It is pretty much straight. If you go to the problem, it says here very clearly given, non-taxable items 20,000, 20,000 into 5% is 1,000 rupees. So that you take into consideration. Then you also pay monthly rent of 5,50,000. Sir, 1/3 is used for personal. We'll come to that later. First, we are calculating the total input tax credit. So 5,50,000 into 18%, 99,000 will be taken. Then he also refers to packing of material. Amount paid for packing 2,50,000. So this 2,50,000 into 18%, that also will be taken into consideration. Salary paid for the store is clearly nil. There is no question of GST on salary. It is clearly employer-employee is clearly given. So therefore, that won't be taken into consideration. So with this, you have come to calculation of T. Okay, you have come to the calculation of T here, which is your the total input tax during the month. Okay, which is nothing but all this amount. Can someone do the calculation here? 9,90,000 plus 5,000 plus 4,000 plus 1,000 plus 99,000 plus 45,000. This is the total amount what we have to take. Oh, also, there's another one which you have missed out. GST paid on inputs used for personal purpose. Take that because total input tax credit we are taking. Then GST paid on rent-a-cab services available for transportation employees. Take that because that is input GST. Whether taxable or not, we'll see later. Then GST paid on items required as free samples, 4,000 rupees. So take this total input tax, what you're getting is T. So T is 11,57,000. Till here, did you understand? Till here, did you understand? If you have not understood, please mention here because the problem is very big. We have to go step by step to understand it further. Now we calculate T1. T1 is what? Inputs attributable to non-business purpose. So how much is attributable to personal purposes? 1/3 of that amount, 1/3 of the premises he is using for personal residential purposes. So moment is using 1/3 of that, 1/3 of the ITC. So 99,000 into 1/3, we have to take 33,000 as the GST paid on the monthly rent. Then personal purpose GST on inputs, that also is non-business. So 38,000, which is T1, is your non-business purpose. Anything others are there in the question? Please look at it. Non-business purpose, nothing is there. So after you cover non-business purpose, we will go to the second one, which is inputs exclusively attributable to exempt supplies. Inputs attributable to exempt supplies. So GST paid under reverse charge for exempt items 4,000. Then non-taxable items reverse charge is 1,000. So total exclusively attributable to exempt supplies 5,000 here. Then blocked credits. What are the blocked credits? Two blocked credits are there here. Rent-a-cab services not obligatory, even under 17 subsection 5, and items given as free samples. This also items gifting lost stolen will come here. So this 8,000 is your blocked credits. Okay. So what is the ITC to be created to the electronic credit ledger? 11,57,000 minus T1 plus T2 plus T3. 11,06,000 is the amount to be created to the electronic credit ledger. I hope till here everyone are clear. Okay. Moving on. Then we look at the common credit, computation of common credit. C2 is equal to C1 minus T4. What is T4? Input tax credit exclusively attributable to inputs and input services intended for exclusively the taxable supplies. So what is used for taxable supplies? If you see here, two things are being used. One is on this 55 lakhs 18%, and here inward transportation of taxable items 1 lakh, which is paid 5% RCM. So here RCM will be applicable. So two cases. GST on taxable items 55 lakhs into 18%, 9.9 lakhs. Then reverse charge on freight based paid to GT on inward transportation of taxable 5,000. 9,95,000 is your GST exclusively used in the taxable supply. So from 11,06,000, you have to remove 9,95,000, which will come 1,11,000 is your common input tax credit. 1,11,000 is your common input tax credit. I hope B also is clear to everyone. Anywhere not clear, please let me know so that I can again go through the problem. Very exhaustive problem. There is a tendency of we getting confused. Then we see the ITC attributable to exempt supplies out of common field. So what is exempt supplies? E is the total exempt supplies. F is the total turnover. So what is the exempt supplies? Go back to the question. Exempt supplies, if you see, 12 lakhs exempt supply, non-GST supplier also exempt supply includes non-taxable supply also. So 15 lakhs is your total exempt supply. Okay, 15 lakhs is your total exempt supply. So come back here. So here 15 lakhs. What is total turnover in the state during the period? This is very, very interesting, this calculation. What is total turnover? Again, go back here. The total turnover, if you see, taxable items 42 lakhs, exempt items 12 lakhs, and not available to GST 3 lakhs. So here 55 lakhs will come. Apart from that, what else has to be taken? This one. This one also will be covered here. So how much is that? Please check once. What is the total supply? Total supply. One is transfer of credit items in the interstate supply, which is your whatever is the market value, you have to take that into consideration. Okay. So 42 lakhs plus 12 lakhs plus 3 lakhs. Okay. You see here, go back here. 42 lakhs is sale, 12 lakhs is sale, 54 plus 3 lakhs. This you have to take 8 lakhs. Why? Because it is a distinct person. Once it is given to distinct person, as per provision section 15 of the CGST Act, value of supply rules, you have to take the open market value of supply. So 8 lakhs have to be taken into consideration. So 54, 57 plus 8, 65 lakhs is the total turnover, out of which exempt is 15 lakhs. So 15 lakhs divided by 65 lakhs into 1,11,000. 25,615 is your ITC attributable to the exempt supply. So in the problem, total ITC is 11,57,000. I'll show you. Total ITC on everything, whatever ITC is there, you have to take. So what all is there? Freight on inward RCM, which is paid, also is to be taken under input tax credit. RCM, which is to be paid, also should be taken as input tax credit. RCM is applicable on inward transportation. So all the GST which is paid on taxable products, on exempt products, on common input tax service, everything you have to take the total based on the problem. All that put together comes to 11,57,000. This is the breakup of that. I hope you get clarity. These are all the breakup on that. Okay. This one is continuation. Continuation from previous. So 25,615 is the ITC attributable to exempt supplies. Okay, 25,615. Now, how much is eligible input tax credit? You know what is the common input tax credit? 1,11,000. From this, you remove the credit attributable to exempt supply. 1,11,000 minus 25,615 is your eligible input tax credit. So you also cover D of the question. Eligible input tax credit is your 85,385. Okay, I hope this is clear. Now you come to the net GST liability. How do you work out this? Taxable value sold in the store 42 lakhs into 18%, 7.56. Taxable items transferred to Goa. This you have to take the open market value of supply, which is 8 lakhs into 18%, which is 1,44,000. Total output tax liability under forward charge is 9 lakhs. What is the ITC credited to electronic ledger? We have already seen 11,06,000 minus 25,615. 25,615 is you have to remove from the ITC credited to the credit ledger, which is 1,080,385. How did we get this? Go here. Okay, this is the common credit. ITC credited to the credit ledger is 11,06,000. Okay, 11,06,000. From there, ITC attributable to exempt supply is 25,315. So 1,080,385 is the ITC credited to the electronic credit ledger. Please bear in mind, I have not yet come to reverse charge at the moment. I'll tell you what it is now. ITC carry forward to next month is 183.85. Under reverse charge mechanism, you have to first pay the respective GST. Okay, here freight paid is 5,000, on 4,000, 1,000. Total liability under reverse charge is 10,000 rupees. 10,000 rupees is the total liability on the reverse charge. So this 10,000, why am I taking? Because 10,000 you have to pay it in cash. 10,000 you have to pay it in cash. That is why I'm taking here. Reverse charge basis, you have to pay it in cash. You claim the credit or not, it is secondary. You have claimed the credit here, it is coming under that 11,06,000. Okay. See, if you see here, it is already coming under the 11,06,000. You are claiming the credit, but at the same time, you have to also pay the amount in cash ledger. That is how the reverse charge liability is to be taken into consideration. Clear? Your old doubt, Janvi. That is clear. Very good. All others, Viraj, don't worry. You will get revise the problems. You'll understand better. I hope others are able to follow. This is a very big problem covering multiple provisions. Kaushiki, Sriram, Tirupati, Janvi. I hope you're all for Namrata. I hope you're all following this. I hope all of you are answering this, attending and following the respective solution. Now we come to the provision of job work, and which is related to job work and input tax credit. Okay. What exactly is job work? We already discussed in the past. If any particular registered person gives the respective goods for the purpose of doing any treatment or process, and after that, if the job worker sends back the goods to the registered person, or sometimes he can even send it back directly to the customer of the initial registered person. So in these two cases, the job work will be applicable. So the important point what we have to understand is, in the job work, how is input tax credit taken into consideration? If I'm purchasing a product, I'm claiming the input tax credit on that and I'm sending it for job work, whether I still get the input tax credit or whether it will be treated as sale, and whether I have to pay the GST on. This is what we are going to discuss. So therefore, job work sector constitutes a significant industry in the Indian economy. Many of the persons, the direct manufacturers, always look at outsourcing some part of the process, outsourcing some part of the treatment to the job worker, because it is more convenient. Because the manufacturer cannot manufacture each and everything. He has to keep it in mind as to whether it is lucrative for him to manufacture everything, whether it is cost effective for him to send it to job work. So mainly what exactly is job work? It is pertains to goods only. There is no question of services here. Job work relates to goods only. So job work basically is processing of goods supplied by the principal. So if the principal is supplying any goods, the processing of the goods is known as job work. So therefore, the name itself explains the meaning very, very clearly. It is processing of goods, inputs or semi-finished goods supplied by the principal for further processing. So many facilities, concessions have been given to the job workers as well as the principal supplier who sends the goods for the job work. So what are the sections we are going to cover here? Sections 19, 141 and 143 of the CGST Act stipulate the provisions relating to job work. State GST laws also prescribe identical provisions in relation to job. Fine. Any queries here before we proceed? Renting a cab, ITC not allowed. It is blocked under 17 subsection 5. Kaushik. It is blocked under 17 subsection 5. If you go to that 17 subsection 5 provision, rent a cab services provided to employees clearly blocked. Fine. Sir, for free samples, on which amount ITC is calculated at 4,000? Let us go back. GST paid on items given as free samples. It is given in the question. No? On free samples, 4,000 rupees has been paid. So on free samples, whatever is given, you cannot claim the input tax credit. It's very clear. You cannot claim the respective input tax credit. Okay. So it comes, if you see here, T3, input tax for which credit is blocked under 17 subsection 5. Okay, that is where it comes. Transportation of passenger is not, you see, transportation of passengers is separate, rent a cab is separate. Okay, transportation of passengers is different. Rent a cab is what? You are renting a cab for the purpose of your commute. If you see in the chapter of reverse charge, I had discussed both these points very clearly. I don't know whether you attended the chapter or not. We discussed very clearly the difference between rent a cab service and transport of passengers. So please go through the supplementary study paper. The difference is very beautifully given for us to understand easily. Okay. So these are the sections which talk about the job work. So therefore, as I told you, principal is a registered person who sends the inputs or capital goods to the job worker for carrying out the job work. Many facilities, concessions are given to the job workers as well as the principal supplies who sends it for job work. The main idea is to make the principal responsible for meeting compliances on behalf of the job work on the goods processed by him. Typically, job workers, if you see, are very small persons, small units. So you cannot burden them on the compliance. Most of the times the job workers are unregistered on. So you cannot burden them. That is why the main responsibility for meeting the compliances with regard to the job work is on the principal, who is nothing but a registered person here. So special provisions are given in the GST law with regard to removal of goods for the job work and receiving the goods after processing without the payment of GST, or a removal of goods from the job worker's premises for supply to the ultimate customer. So two things are there. First scenario is I remove the goods for the job work. And once the job worker completes the respective processing of that, he sends back the goods to me. This is point number 1. Okay. The second one, when I send it to the job worker, instead of he sending it back to me, I instruct him to send it directly to my final customer. This is the second situation. So the benefit of these provisions is given both to the job worker and the principal. So 2 subsection 68 of the CGST Act defines the term job work as any treatment or process undertaken by a person on goods belonging to the other registered person. As I told you, any treatment or process undertaken by a person on goods belonging to another registered person. The important point here, please make a note of everyone, that the goods have to be belonging to a registered person. The person, when he sends the goods for the job work, needs to be registered under the CGST Act. Only then it will come under the terminology of job work. It's a very, very important point. And if you observe, the ownership of the goods does not get transferred to the job worker, but it rests with the principal. Ownership of the goods doesn't go to the job worker. Principal himself has the ownership. So in addition to the goods received, can also use his own goods. So principal will send in the goods. On that goods, the job worker can do the treatment of job work, or apart from those goods, he can also use his own goods for the purpose of providing the services of the job work. Okay. Again, the job worker is required to obtain registration only in the cases where his aggregate turnover to be computed on all India basis in the financial year exceeds the above threshold limit, regardless of whether the principal and job worker are located in the same state or in different states. So therefore, it doesn't matter whether the job worker is located in the same state as the principal or different state as the principal. He is required to obtain registration only if he crosses the threshold of the registration. What is the threshold? 20 lakhs in most of the cases. In some cases, it is 40 lakhs. So once he crosses that threshold only, the job worker can take the registration. Some definitions: taxable person means a person who is registered or liable to be registered at 22 or 24. We have seen this definition multiple times. The moment you are registered under GST, the threshold limit does not matter. The moment you are registered under GST, you automatically become a taxable person. The moment you are liable to be registered, That means your turnover crosses the threshold, but you are not yet registered. You become liable to be registered. If you become liable to be registered, then also you become a taxable person. I hope the point is very clear to all of you. And job work, as I told you, it is a treatment of process undertaken by a person on the goods belonging to another registered person, and the expression job worker shall be construed accordingly. Shall be construed accordingly. Okay, taxable supply means what? It means a supply of goods or services or both, which is leviable to tax under this act. Okay, it means a supply of goods or services or both, which is leviable to tax under this act. So this particular section 143 defines the job work procedure. What is the job work procedure? It says that the principal can send the goods without payment of tax to the job worker. So a registered person, in this case the principal, can send the input or capital goods under intimation, subject to certain conditions, without payment of tax to the job worker, from there to another job worker also. Please bear in mind, two job workers also covered. You send to the job worker, from there another job worker also you can complete, or after the completion of the job worker, bring back such goods without payment of tax, or remove the processed goods from job workers' premises for supply to the customer. Such goods need to be removed under intimation to proper officer, subject to the condition. We shall see the rules pertaining to that. The principal is not required to reverse the ITC availed on the inputs and capital goods dispatched to the job worker. This is the most critical thing. When I'm sending the inputs and the capital goods, when I'm procuring the input or the capital goods, first of all, I would have claimed the input tax credit. Then once I claim the input tax credit, if I'm selling the inputs or sending the inputs or the capital goods to the job worker, from there I can send it to another job worker also, or from there I can ask him to supply to my final customer also, or I can ask him to complete the processing and send it back to me. I don't have to reverse the ITC availed on the inputs and the capital goods. Even though the goods are removed from my place of business, I don't need to reverse the input tax credit. Okay, and also the principal can send the inputs or capital goods directly to the job worker. That means what? See, I am purchasing from Mr. X, and I have to give the goods for job work to Mr. Y. I tell Mr. X, I don't want to procure it from you. Since you, if Y's location is very close to X, I tell him, I will purchase it from you and send it to him. But rather than that goods coming to me, I would request you to send the goods directly to Y. I would request you to directly send it to Y. That also is possible. And in that case also input tax credit can be claimed. Very, very clear. That time also input tax credit. Okay. But there is a time limit which is applicable in this particular situation. This time limit was there prior to GST also. In excise law, in central excise, our job work was a critical point, because again that related to goods, and manufacturer only usually sends it for job work. At that particular point, the time limit for inputs was 6 months, and for capital goods is 1 year. But under the GST, they have been given further lenience and extended that period for 1 year for inputs and 3 years for the capital. So therefore, the important point is you can send the inputs or capital goods to the job worker. You need not reverse the input tax credit. But however, the condition important here is that the inputs or capital goods need to be returned within 1 year for inputs and 3 years from the date of sending of the goods to the job worker. I hope you got the point. You can send the inputs or capital goods to the job worker. You need not reverse the input tax credit, but they have to send it back to you within 1 year from the date of sending such goods to the job worker in case of inputs, and within 3 years from the date of sending such capital goods to the respective job worker. Sometimes this period of 1 year and 3 years may not sufficient cause be shown, be extended by the commissioner for further period not exceeding 1 year and 2 years respectively. So sometimes if due to some reason the time limit is not met, you can apply to the commissioner saying that it is taking more time than usual. So for inputs, another 1 year can be taken, that is consolidated period of 2 years. And for capital goods, another 2 years will be taken, therefore consolidated period of 5 years. But only if the commissioner is satisfied, he will extend this. After the job worker completes the process of the goods, he may clear it to another job worker for further processing, or he may dispatch the goods to any of the place of business of the principal without the payment of tax. Understood? So first thing, he can supply it to another job worker for further processing. He can dispatch the goods to any other place of business of principal without payment of tax, or he can supply to the ultimate customer against the payment of tax as may be applicable. Principal can send the goods without payment of tax to the job worker. So direct supply of goods from job worker premises to third party also can be done by declaring the premises of the job worker as additional place of business in the registration. What is this additional place of business? You will see when you discuss the registration chapter. The moment you are registered under GST, in your GST certificate, they give what is called as a principal place of business, and the option also for additional place of business is given. In this particular situation, the direct supply can be done on declaring the premise of the job worker as the additional place of business in registration. However, declaration is not required by the principal where job worker is registered under 25 or principal is engaged in supply of 25 goods. So therefore, the facility of additional place of business, how does it work? You need to add that particular place of business. You need to give the address proofs for that, that is your latest electricity bill or the rental agreement. And with that, you have to update it in your GST portal. So additional place of business has to be updated. But declaration of additional place of business is not required if the job worker himself is registered under GST. And number two, the principal is engaged in supply of notified goods. In such cases, the supply of goods will be regarded as supply by the principal and not by the job. Time, value, and place of supply would be determined in the hands of the principal, irrespective of the location of the job worker's place of business or premise. Everything you should see as if the principal only is doing. That is an important point. Another important point here is the invoice also has to be issued by the principal. Sometimes exports happen wherein the principal sends the particular products to the job worker, and the job worker from his place of business exports the goods directly outside the country. For exporting of the goods outside the country, you require what is called as an LUT or a letter of undertaking. It is clarified here that the LUT also is to be generated by the principal only. Just because it goes outside the country from the place of the job worker, it doesn't mean the LUT has to be executed by the job worker. The LUT has to be executed by the principal. Fine. Even with regard to supply of waste and scrap which is generated, the same principles will apply. Whenever the goods are sent to the job worker, the principal has to send an intimation to the proper officer. In that, he will clearly give the details of the inputs which are to be sent to the principal, and also the nature of processing which has to be carried out by the job worker. Clearly, he has to give. The responsibility for keeping proper accounts with regard to the inputs or capital goods, again, totally lie with the principal only. As I told you, for entire compliance, they have kept the principal responsible. What happens if the inputs or capital goods are not received from the job worker premises within that 1 year or 3 years, as the case may be? So where the goods are not received or not supplied from the job worker's premises within the specified time limit, it shall be deemed to be a supply from principal to the job worker from the day when it was sent for job work. Did you understand? Let us take an example here. Principal sent goods worth. First, let us send goods worth. This is inputs. Goods means inputs. 5 lakhs to job workers' premises on say 1st December 2020. Okay, job workers premises. What is the time limit which is given for inputs? 1 year. So he has to receive the goods post processing within 1 year from the date of being sent to the job. Now let us assume he has received the goods on 31st March 2020. More than 1 year has elapsed. The goods sent on 1st December 2021 will be treated as supply from principal to job worker. Okay, principal has to discharge the GST along with interest. You understand? So if you see here, whenever it's not received back, okay, within the specified time limit, it will be deemed to be a supply from the principal from the date it was sent for the job. Accordingly, he will be liable to tax and interest. So therefore, the goods which are sent for the job worker acquire the character of supply when the inputs or capital goods are neither received back within 1 year or 3 years of the being sent out. Responsibility for sending the goods for job work as well as bringing them for further supplying to the customer has been cast on the principal. Fine. What is the date of supply? As I told you, the date of supply will be as for example 1st December 2021, on which the inputs or capital goods were initially sent. Interest for the intervening period shall also be payable on the tax by the principal. If such goods are returned with after the stipulated time period, same will be treated as supply by the job worker to the principal. Job worker to be liable to pay GST if is liable for registration in accordance with the provisions. Did you understand? So in this particular situation, if the goods are sent, in this case, if job worker is liable to be registered, then he will charge the GST from the principal. I hope you got the point. He will charge the GST from the principal. Okay, I hope that is clear. Further, it may be reiterated, there is no requirement of either returning back or supplying the goods as far as molds and dies, jigs and fixtures are. So apart from the main product, certain small products like molds, jigs, accessories, etc., this also gets sent to the job worker. It is very clearly clarified. There is no requirement of returning that or supplying the goods from the job worker place of business for the molds and dies. Right? So for the purpose of job work, again, inputs include intermediate goods arising from any treatment or process carried out on the inputs by the principal or the job worker. Fine. I hope that is clear. Now we look at the provisions of ITC with regard to the job work. That is why I first went to the job work provisions so that you understand what the job work provisions are. And now we look at what is the section of ITC which deals with the job work. If the goods sent by the principal to job worker are not received the payment deemed as supply. Okay, I understood that point. But my question is whether the principal has to raise the tax invoice on the goods on the date on which time it's 100%. 100% he has to raise the tax invoice. But here the invoice will be dated on that date. And he has to pay if the job worker is registered, he will raise a B2B invoice also. It is treated as a supply. And once after the later period of the job worker sends, that also will be supply. Subsection 1, principal shall, subject to such conditions and restrictions as may be prescribed, be allowed input tax credit on the input sent to the job worker for job work. So very simple section. Whatever inputs are sent to the job worker, on that input tax credit will be allowed. Then 19 subsection 2, Notwithstanding anything contained in 16(2)(b), that is the conditions for claiming the input tax credit, the principal shall be entitled to credit of input tax on inputs, even if the inputs are directly sent to the job worker for job work without being first brought to his place of business. Because in section 16 clearly says that ITC can be claimed only once the goods are received in the hands of the taxable person. But here what is happening? The goods are not received in the hands of the taxable person, but the goods are directly going from the supplier. See, I am purchasing the product and that product is going directly to the job worker. I'm instructing him to send it directly. So therefore, then also the input tax credit can be claimed by the principal. Then where the inputs sent for the job work are not received back by the principal after completion or otherwise are not supplied from the place of business in accordance with clause A or B of 143(1) within 1 year of being sent out. The same thing what we discussed. It shall be deemed that such inputs has been supplied by the principal to the job worker on the day when the said inputs were sent out. So provided that where the inputs are sent directly to the job worker, period of 1 year shall be counted from the date of receipts of input by the job worker. Very important provision. Wherever the inputs are not sent to the principal by the supplier, it is sent directly to the job worker. In that case, the period of 1 year, whatever is there, you have to take it from the date on which the job worker has received the particular inputs from the supplier. 19 subsection 4 refers to capital goods. What we discussed, the same thing in the provision. The principal shall, subject to the conditions and restrictions, be allowed input tax credit on capital goods sent to the job worker for job work. And again, this also, notwithstanding whatever contained, can directly also be sent by the respective supplier to the job worker without being first brought to the place of business. Then also the input tax credit can be claimed. Capital goods whichever has been sent, not received by the principal within 3 years from being sent out, deemed as if the capital goods has been supplied by the principal on the day when it was sent out. When directly sent to the job worker, period of 3 years shall be taken by receipt. Very similar to the input section, but only thing here, the time limit is 3 years. Nothing contained will apply to molds, dies, jigs and fixture or tools. For this, there is no requirement of being returned also. Now, these are the rules which are there for the job work. What are the conditions and restrictions which are to be there? What are the returns that are supposed to be filed by the job worker or the principal employer is covered in this particular rule. Rule 45 covers all of this. 45 sub rule 1, the inputs semi-finished goods or capital goods will be sent under a cover of a challan, okay, issued by the principal, including when it is sent directly to the job worker also. And wherever the goods are sent by one job worker to another job worker, the challan may either be issued by the principal or the job worker also. But whenever the challan is issued by the principal, it has to be endorsed by the job worker, clearly indicating the quantity and description of goods where it is sent by one job worker to the other or returned to the principal. These are all rules not very important from examination, just some procedures which you have to follow whenever you are sending the inputs or capital goods for the purpose of treatment or process, that is job work. Provided further that the challan endorsed by the job worker may be further endorsed by another job worker, indicating the quantity and description where it is sent by one job worker to the other or returned by the principal. Very simple, self-explanatory. Whatever challan which is there, it shall contain the details specified in Rule 55. Rule 55 covers the details. Very simple. How much is the quantity? What is the value of the product which is being there? All those things has to be clearly given in the challan. Then whatever challans are there in respect of the goods dispatched to the job worker or received during 1 quarter. So this is a quarterly return which you have to file. You will include this as form ITC 04. This is the form which you have to file, furnished for that period on or before 25th day of the month succeeding the quarter. So it's a quarterly return which you have to file. What all details you are sending to the job worker, you have to file it in this ITC 04 return once every quarter, on or before 25th of the month succeeding the quarter or within such period as may be extended by the commissioner by the notification in this behalf. Fine. I hope this is clear. Then section 143, it shall be deemed that the inputs or capital goods has been supplied by the principal to the job worker on the day it has been sent out, and said supply will be declared in 140 or GSTR 1, principal shall be liable to tax along with the applicable interest. Same thing what we have seen, but given in the rule also. Principal entitled to take the job input tax credit even if it are bought directly sent, directly received at the 1 year. Again, this is very critical. Period of 1 year to be calculated from the date of receipt of the said inputs at the job worker premises whenever supplier sends the goods directly. Similar for capital goods. Now let us look at an example based on this. The supplier of notebooks for schools sends the paper of required dimensions and GSM to a job worker for making the notebooks as per the design given by him. However, government changes the specifications of the notebooks for supply to its schools. The supplier sends a fresh stock of paper with fresh instructions to the job worker, instructs him to hold the earlier consignment in stock till a buyer is found. The new notebooks are easily sold, but paper and semi-finished notebooks of the old design lie in the godown of the job worker for over a year. Explain whether the tax needs to be paid by the principal for the old design consignment. Please try to answer this. Any answers? Chapter 16 in module 3. That is the study material which you have to download. Okay. Chapter 16 in module 3. That also we are covering because parallelly it relates to the same thing. So we are covering that also. That particular module. Very small chapter. That also we are covered everything. So that chapter also is done here. Okay. Yes. So therefore here, if you see what exactly is happening here, the supplier is sending the goods for the job work for making the design. Later the design changes, fresh paper also sent. But old paper also he has not taken back. New paper, new notebooks, very clear, you are selling it easily. But the old ones still lying for over a year. So they are inputs which are lying for over a year. Therefore, principal definitely has to pay the tax. It shall be deemed as supply. The date of the sending of the goods to the job worker of the old design has to be taken into consideration, and along with interest, he has to pay the respective tax. Okay. So further points here, where the goods are sent by the principal to one job worker only. In that case, he has to send the inputs and capital goods to the job worker under the cover of a delivery challan, because delivery challan is important because this is not a supply, so there won't be any e-way bill. There is a delivery challan which he has to issue. In that, all the details in rule number 455 have to be there. What all are given in rule number 55? Date and number of delivery challan, name, address, and GST number of consignor, consignee, HSN code and description of goods, quantity, taxable value, tax rate and tax amount, place of supply and signature. This you have to prepare in triplicate for sending the goods. 2 copies will send to the job worker along with the goods. 1 copy he has to send back along with the goods when he is returning it to the principal, so that it is very clear that the time limit within which he is doing. And this ITC 04 has to be filed by the principal on a quarterly basis before 25th of the month succeeding the quarter. When goods are sent from one job worker to the other job worker, what is to be done? Again, delivery challan can be issued either by the principal or the job worker also. Accordingly, the delivery challan issued by the principal may be endorsed by the job worker, indicating the quantity and description. When the goods are returned, he should send 1 copy of the delivery challan while returning after carrying out the job work. What happens when the goods are sent directly by the supplier to the job worker? In this case, the goods may move from one place of the business of the supplier to the place of business or premises of the job worker with a copy of invoice issued by the supplier in the name of the buyer. Job worker's name and address also should be mentioned as a consignee. So from the supplier, if he's directly sending to the job worker, in that case, you have to give a copy of the invoice also. That invoice has to clearly give the name of the buyer. Job worker's name address should be given as consignee. Okay. Then buyer will also issue the delivery challan, send the same to the job worker. Sometimes what happens, the goods are returned in piecemeal. One by one, he'll finish the process and he'll send. So piecemeal quantities, whenever it is there, in that case, whatever challan issued originally by the principal cannot be endorsed because that return refers to all the goods. So therefore, you cannot endorse that. Fresh delivery challan has to be issued by the job worker. Fine. As I told you again, this intimation has to be filed. It's a responsibility of the principal again to include all the details of the delivery challans related to the goods sent by him to one or more job worker or from one job worker to the other, and its return in ITC 4 by 25th of the month succeeding the relevant quarter. Now, with regard to waste and scrap, what does it say? Notwithstanding anything contained, waste or scrap generated during the job work may be supplied directly from his place of business on payment of tax if he is registered, or by the principal if the job worker is not. So what has to be done for waste and scrap? You have to see whether the job worker is registered or not. If the job worker is registered, then he can directly supply from his place of business on payment of tax. If he is not registered, the principal has to supply. Now let us look at some questions here. Genie engineers had a mold delivered directly to job worker from the supplier for making certain precision parts for use in the factory of Genie engineers. As per agreement, the mold was to remain with the job worker as long as the work was being sent to him. After 4 years, a departmental audit team that visited noticed the mold and traced it to Genie engineers. GST was demanded from Genie engineers for taking ITC without receiving the mold, and furthermore for not bringing the mold after 3 years of delivery. How should they respond to this? Please try to answer. Any answers for this one? So here if you see 19 subsection 5 clearly mentions that molds are not covered as capital goods or inputs. Whenever the molds are sent, in fact, they need not be returned also by the job worker. So therefore, this is basically a mold which has been sent. And this mold is like an accessory for the purpose of making the respective products. So the mold will remain, and 4 years the mold was there only. But since the provision very clearly says 19 subsection 5 that whenever a mold or an accessory is sent out, it need not be returned also. So therefore, the demand of GST from Genie engineers is incorrect. ITC can be claimed, and in this case, because the time limit of 3 years does not apply to molds, dies, and fixtures. Next question. Sudama Industries, registered in the state of Jammu and Kashmir, manufactures plastic pipes for other suppliers on job work basis. On 10th January, Plasto manufacturers, registered in the state of Himachal Pradesh, sent plastic worth 4 lakhs and molds worth 50,000 free of cost to Sudama Industries to make plastic pipes. Sudama Industries also used its own material, a special type of lamination material for coating the pipes worth 1 lakh in manufacture. Raised an invoice of 2 lakhs as job charges for making pipes and returned the manufacturing pipes through delivery challan to Plasto manufacturers on 20th October in the same financial year. Same quantity and quality of plastic pipes as was made for Plasto were made by Sudama from its own raw material and sold to Solid Pipes, registered in Jammu and Kashmir for 7.5 lakhs on 20th October. Okay. So examine the scenario, offer your view. If you want to go through the problem, it is there in your job work study material. Job work study material, everyone. you have to go on page number, one second, page number 16.19. Okay, 16.19. If you have the study material, please go through that. These are all the questions what is asked. Offer your views. Is there any difference between the manufacture of plastic pipes by Sudama for Plasto and for solid pipes? Whether Sudama can use its own material even though it is manufacturing plastic pipes on job work basis, whether sending the plastic and molds to Sudama by Plasto is a supply and taxable invoice needs to be issued, whether they should include the value of free of cost plastic and molds supplied in its job charges. Please try to answer this. What is exactly happening here? First of all, here Sudama Industries will be the job worker and is also registered. That is the first thing what you have to note. Okay. Then he on 10th January, a principal who is again registered in Himachal Pradesh, he sent plastic worth 4 lakhs. Plastic is again inputs here. On 10th January, he has sent. And molds worth 50,000 free of cost for making plastic pipes. Okay. Sudama Industries also uses own material. There is no restriction. When we saw the job work provisions, it is very clearly mentioned that you can also use, the job worker can use his own material in the process of job work. It raised an invoice of 2 lakhs as job charges for making the pipes and returned the manufacturing pipes to delivery challan on 20th October in the same financial year. So the pipes were returned within 1 year from the date of it being sent. Okay. Now, second, what is happening? The same quality and quantity of plastic pipes as was made for Plasto were made by Sudama Industries from its own raw material and sold to solid pipes registered in Jammu and Kashmir for 7.5 lakhs. So first one, is there any difference between manufacture of plastic pipes by Sudama for Plasto and for solid pipes? Try to answer this. First one, is it the same? Any answers? So therefore, if you see here, for Plasto manufacturers, he does job work because it is very, very clearly given that Plasto manufacturers sends the goods. If you see here, Plasto manufacturers have sent plastic and molds worth 50,000. So on this, it has done the job work and done. So the first case, it is the job work. Second case, for solid pipes, and job work is a supply of service. Okay. But the second case, what he is doing, he is making the pipes for solid pipes and selling. So that is supply of goods. So therefore, these both are different. So Plasto manufacturers, it is a job work. And in case of solid supply, it is a supply of goods. Whether he can use its own material even when manufacturing the plastic pipes, it is very, very clearly given that the own material also can be used. A circular is there which has clearly clarified that own material also can be used. So this also is yes. Then whether sending the plastic and molds to Sudama by Plasto manufacturers is a supply and a taxable invoice needs to be issued. So when Plasto is sending to Sudama, it is doing in the nature of job work. So without payment of tax, he'll send it. So therefore, the invoice is not required. It is not a supply at all. So therefore, there is no need of any invoice. Only when this plastic is not sent within the respective time period, it is more than 1 year is takes place, after that he sends the plastic, only then the tax invoice has to be issued. Whether Sudama should include the free of cost plastic and molds supplied in its job charges. With regard to molds, as I told you, in this case, if you look at section 15 subsection 2 clause B, value of supply related thing. Any amount which the supplier is liable to pay but has been incurred by the recipient is to be included in the value of the supply. However, in this case, Sudama will not include the value of free of cost as they are manufacturing the pipes on a job work basis. So the scope of supply is to do it on job work. Therefore, it is not required to pay for the raw material. Therefore, it should not be included in the job workers, even though it has been incurred by the plaster manufacturer, because the responsibility is stops with job work. So therefore, this value of free plastic and molds will not be included. Okay, so I hope these questions are clear. Further, another question. Alok Private Limited, a registered manufacturer, has sent steel cabinets worth 50 lakhs on delivery challan to Prem Tools, registered job worker, for job worker on 28th January. Scope of the job work included mounting the steel cabinets on a metal frame and sending the panels back to Alok. Metal frame is to be supplied by Prem Tools. Prem Tools has agreed to consideration of 5 lakhs for entire mounting activity, including supply of metal frame. During the course of mounting, metal waste is generated, it's sold by Prem Tools 45,000, sent to the steel cabinets on 3rd December in the same financial year. Assuming the GST rate for metal frame is 28%, for metal waste is 12%, standard rate of services is 18%, are required to compute the GST liability. Also, give the reason for inclusion or exclusion of the value of cabinets. Please try to answer this problem. Okay, he's asking you to calculate the GST liability. Here, if you see GST liability of Prem Tools, first of all, what is he doing here? Prem Tools is the registered job work. Okay, scope of the job. He has agreed for consideration of 5 lakhs. So therefore, in this particular situation, 5 lakhs is for the mounting activity, including supply of metal frame. Okay, it is for the mounting activity. So therefore, job work charges straight away 5 lakhs you have to take into consideration. So therefore, 5 lakhs. Okay, job work charges rupees 5 lakhs, 18% rupees 90,000. Okay, this is there. And second, what is doing is selling the scrap for 45,000. So what had we discussed for scrap also, section 143. Whatever 45,000 scrap is there, since he is registered, he will raise the invoice, and scrap is the rate is 12%. Okay, so therefore, in this case, 45,000 sale of scrap, 45,000, 12% GST. How much does it come to? 5,004. Okay. Anything else is doing? Steel cabinets is putting in the same financial year. So therefore, since he's sending in the same financial year, there is no question of any ITC reversal, and there is no question of any supply by the principal to the job work. Therefore, in this case, total GST payable is 95,400. Fine. I hope this is clear. Bedding manufacturers, a registered person, instructs its supplier and sends the capital goods directly to Rajesh Enterprises, who is a job worker, outside its factory premises for carrying out certain operations on the goods. The goods were sent by the supplier on 10th April, were received by the job worker on 15th April. Rajesh Enterprises carried out the job work but did not return the capital goods to principal. Discuss whether they are eligible to claim the input tax credit, what action under GST is required to be taken, what would be our answer in place of capital goods, jigs and fixtures are supplied to the job worker. Very, very simple question. Again, based on the provisions, but only important concept which is cleared here. What is the date to be taken? The date which you have to taken in case of direct sending by the supplier to the job worker is the date of receipts of the inputs by capital goods by the job work. That is the important point which is mentioned here. Okay, that is the main point. So whenever the capital goods are sent, the date of receipt is important, and he has to send back the capital goods after doing the process within 3 years from the date of sending receipt of the input. So therefore, what has to be done here in this case, whether they are eligible to retain the input tax credit. So therefore, in this case, BAD is eligible to retain the input tax credit, even if the capital goods are sent directly by the supplier to the premises of the job worker. What action under GST is to be taken by bedding manufacturers? Nothing. They can claim the input tax credit, no problem. In case of now, what action is to be taken? BAD should receive back the capital goods within 3 years from the date of receipt of inputs by the job worker, which is nothing but that is 15th April. Okay, right? What would be answer in case of capital goods? Jigs and fixtures. Jigs and fixtures supplied to job worker need not be returned. Therefore, there is no time limit for the same. Fine. That was your chapter with regard to job work. Fine. So with this, we come to the end of the ITC job work chapter and also the ITC chapter. There are multiple other problems what we are going to discuss on Wednesday. For this, I would ask you to, I kindly request you to please go through all the provisions in detail, because the class on Wednesday we will be covering all the problems based on the input tax credit chapter what we have discussed, and I want you to answer all those questions by yourself, or at least try to answer it. But in case you don't go through the study material, please go through at least the let us recapitulate section. If you go through that also is sufficient. You'll be able to easily remember, because we have covered 3 exhaustive classes on. So therefore, the next class we will focus purely on the problems which is there in the study material, other problems which have been asked in the exam. We shall clearly look at the problems, and I want you to please kindly go through the provisions through the study material, and you please based on that you have to try to work out the problem by yourself. That is the most important point. So I kindly request you to please study the provisions before Wednesday session. I know there is only 1 day time, but it is sufficient because you are just revising. You already know the concept. We'll work out the problems based on Rule 42, Rule 43. We'll work out the problems based on 17 subsection 5 and multiple other problems for you to gain the confidence in the chapter of input tax credit. Fine. So with this, we come to the end of today's session. Thankfully, the rain has not disturbed the session. I was a bit worried because of the inclement weather which was there. So I hope all of you made use of the session, and I request once again to please revise it before Wednesday's session. So thank you very much, and let us close the session for today, and I will see you on Wednesday again at 6 p.m. Thank you very much. Good night.